Indiabulls Housing Finance reported earnings for the fourth quarter, and we've got Gagan Banga, Vice Chairman and Managing Director with the company, join us to talk about the numbers. Thank you very much, Mr. Banga. Good having you with us here. You've seen pretty healthy momentum, especially if I look at the top line, the interest income, sir.
Yeah, so we witnessed a growth of approximately 27% of book, and that has largely been possible because we saw a pretty sharp decrease in our cost of borrowings, especially on the bond side, subsequent to the upgrade of the company to a AAA rated company in July of 2014. So the bond program has seen a reduction of about 130 basis points. And that has allowed us to compete even more aggressively in the marketplace in the least risk home loan segment. And my sense is that with this kind of a cost of fund advantage, we should be able to sustain momentum on book growth, and then revenue and net interest income simply follow suit.
Do you expect the momentum on funds under management to continue, the growth there?
Yes, so assets would also continue to rise more or less at the same level. So my sense is that overall across all financial parameters, be it book growth or AUM growth or NII profits, all of those should grow in the range of 20 to 25% through FY16.
Can you talk about asset quality? I mean, NPLs were less than 1%.
The credit environment remains quite challenging. That said, my mortgage lenders in general and Indiabulls Housing in particular has been able to sustain asset quality. So gross NPLs and net NPLs both are practically flat over FY14. And my sense is through FY16 we should actually see a marginal drop down in the delinquency rates, and we could be 2 to 3 basis points lower by the end of financial year 16.
Have you seen any, how have your cost of funds behaved, Mr. Banga? Have you seen any benefits coming in from there?
Yeah, so about 50% of our borrowings come from the markets and 50% comes through bank borrowings. The market borrowings are largely a function of credit ratings. Once we got upgraded, ever since then the yield curve has caused similarly rated corporate paper to come down by about between 60 and 70 basis points, whereas our cost of bonds has actually come down by 130 basis points. So we've gained about 70 basis points, which is a unique saving to Indiabulls Housing. My sense is that we have another 20-25 basis points of savings on that account to go for 50% of our borrowings. So that should result in an immediate decrease in cost of funds of another 10 basis points by June or July of 2015. And then there is an anticipated reduction in base rates. Few banks have already done so, others would do so. So that would also reduce our cost of monies by the amount that the base rate reduces. We will have to pass on whatever is the cost of fund decrease on account of base rates, but the balance 10 to 15 which will happen on account of bonds will allow us to compete aggressively in the marketplace and spur growth.
How will you fund future growth? Can you talk about that?
So our dependence on bonds would continue to be high and higher, and that would result in greater diversification. I think there are three key parts to liability management. One is that we have to continue to diversify both the instruments through which we borrow as well as our lenders, both of which is work in progress, and I think we've made good progress by having over 130 different lenders to us. Work on that would continue. The second part is ensuring that cost competitiveness stays. Now with an upgraded credit rating to AAA, I think we are well positioned to continue to sustain that. And the third is to always maintain a liquidity buffer. We have for the last 8 years maintained a discipline of keeping at least 15 to 20% of our loan book in the form of cash. As of 31st March, we had around 9,600 crores of cash. And I think that's a principle which we will definitely continue to abide by. If we continue to work on all these three fronts, there is no reason why the liability franchise will not grow and get better from here.
We'll leave it there, Mr. Banga. Thank you very much for your time. Good speaking with you. Appreciate it. So that's Gagan Banga there. 560 odd is where the stock is trading at this point. We'll take a quick break. We'll come back in 2 minutes, and when we return, we have Sachin Shah joining us, fund manager with MK. That's in a bit.